Do you think there is real reflation risk in the next, say, 6 months?
That is something that we can see how markets are repricing, and there's a measure called 1-year inflation 1 year forward. So what does markets think 1-year inflation is a year from now? That has been creeping up. It's actually now at 3.6. It's been a trigger point in the past where the market starts to worry. So whether it's the deportation that's causing that or fiscal spending, I'm not sure. But, it is, markets are starting to think about it.
Tom Lee of Fundstrat Global Advisors shared his optimistic market outlook, with an S&P target of 6,300 and confidence in granny shots, high-quality large-cap stocks across key investment themes. He highlighted the potential for cyclicals, particularly in industrials and financials, benefiting from deregulation and lower interest rates, despite challenges in energy and commodities. Lee emphasized the opportunity in small-cap stocks, which are trading at steep discounts and poised for recovery after years of underperformance. Faster earnings growth, less trade exposure, and potential boosts from mergers make small caps particularly attractive in the current market environment. On broader trends, Lee discussed inflation risks, deregulation, and trade policy uncertainties, expressing overall optimism about a pro-business climate. He also noted emerging concerns about the pace of AI advancements and their potential impact on economic growth and productivity.
You like to call them granny shots, easy plays. In your view, I have to imagine that list has gotten longer.
Mm-hmm. Yes, it is. But it stayed around 35 names, but just high quality names that are in the right sort of themes. We have 7 themes, and as long as they're in more than one theme, they become a granny shot.
Higher conviction on those names, I imagine.
Yes, higher conviction, and these are names that I think most people are going to be familiar with because they're large cap stocks.
There's some discussion about cyclicals today, that they make sense, and a lot of people are looking to 2016 for analogs, but some argue that there's not the commodity price support that you might have had in a prior cycle. You buy that?
You don't necessarily need commodity prices to help cyclicals.
Yeah, energy, but even materials to some degree. Some are.
Yes, that's right. Yes, so for those, I would say yes. I'd say the outlook for energy stocks isn't great, as good as people might expect under a Trump presidency, just because expanded drilling is lower oil prices. But for cyclicals like industrials and financials, this is, for all the things you guys were discussing, a great environment, including M&A and cost of money falling and animal spirits and deregulation.
Let's take a check on shares of Nvidia this morning. Piper Sandler naming the stock a top large cap pick and saying it's a must own for the ramp up of its Blackwell chip, rating that stock an overweight with the price target of $175. The price today, $148.17.
You mentioned some of the hyperscalers, guys. Nvidia, a couple nice notes. One is Piper makes it a top pick. And then this Melius note is pretty interesting. Ben writes this goes to 185. He says, we're even more excited about Blackwell than we were before. Giving up on Nvidia with Hopper, meaning the current cycle, Ben says, is like giving up on Apple after iPhone 1 or 2. And they've got some fresh estimates, David, on hyperscaler CapEx. 282 is their number. 282 billion
over what period of time?
Year on year. It'll be up 24 year on year. And that's including Oracle, Amazon, Meta. I'm not sure how it compares to some of the Morgan Stanley numbers we got.
That was over 100. Yeah, I mean, right. They were 300. That's right. Yeah, actually, I got to check the numbers. Something has been interesting, though, that I've sort of been trying to focus on. There was an information story from last week. I also listened to this podcast that Mark Andreessen and Ben Horowitz do. It was actually done prior to the election, but it has nothing to do with that. It was about, or at least they raised the idea that the progress of the large language models, particularly at OpenAI, is slowing dramatically from one model to the next, so to speak. And the information in the story also talks about Orion. That's the upcoming flagship model, I guess its code name there. Its performance did exceed that of prior models, but the increase in quality was far smaller compared with the jump between ChatGPT 3 and ChatGPT 4. Those are the last two models, of course. And Andreessen said the same thing on that podcast. I just flagging it because it's kind of interesting. Are they running out of data? What is the reason? Is it true? Is there really a slowing in progress? Because that wasn't expected. If in fact, and they're using as many or more CPUs, so it's not like it's a chip-related issue. It simply may be either a data-related issue or unclear. Certainly, for me, unclear, Carl. But that would have big ramifications if the progress suddenly stops.
I know. The other, and not to get too far afield from what you're saying, Andreessen tweeted the other day, called America an economic coiled spring.
Saw that.
We should be growing at least 4, and ideally 6 to 8 plus % on GDP. He says growth has been brutally suppressed since before I was born. That would be interesting, but then we get back to these. We had these discussions during the first Trump term, and that is you need people. And how are you going to get that kind of growth without people?
Right. Well, maybe it's going to be robots.
Generative AI.
Yeah.
That's how
but
you do it.
again, but maybe if it stops progressing, Sarah, that's the point. Listen, I'll listen to Mark Andreessen and many other experts on this, certainly Jensen. I have no idea, but that story, citing people at ChatGPT as the sources, and then Andreessen just basically saying it on the podcast as well, I thought was interesting.
It is because we all think it's on a one-way ticket, faster and higher.
Correct. I mean, and by the way, the rate of change will only increase
exponentially.
So, it perhaps bears.
Or more of just better growth outlook could help inflation expectations rise. I guess where Trump trade 1.0 ran into trouble was around trade policy. And once we see what he delivers there in terms of tariffs, something he's been very, very consistent on, do you think the market is looking past that, or everything else, the deregulation, the lower corporate taxes, is going to offset any weakness on trade?
I think that if someone was trying to paint a negative picture, that's the tariffs and the trade is what's on people's minds. But of course, that's the one where we don't know what the ultimate sort of policies will be. I'm sure markets will actually provide a lot of real-time feedback, and I think that's going to help shape what the policy is. So I think in general, we should expect a pro-business environment, one that's probably equity-friendly as well.
Where are we on fundamentals and just, in terms of this recent rally, in terms of multiples and your expectations on earnings as we head into next year?
Earnings season, I think actually, as we're wrapping up, is still been very solid. As you know, the drag on earnings has been energy and some of the commodity groups as well as healthcare. But, groups like industrials and tech are still producing good numbers. I think next year the outlook should be good because cost of money is coming down and we're seeing housing activity pick up. And if there's mergers, this is actually much better for small caps, and small cap earnings growth has been around 40%. So I think it still sort of guides us to the same trades, which is we want to be more cyclical over the next 6 months, and then also look at things like small caps and Bitcoin.
Small caps, why mergers? Just give me a little bit more on why small caps are going to be a bigger beneficiary.
Well, part of it is the backdrop. Small caps have underperformed for the last 5 years by really the largest margin in 25 years. They're now trading at 10 times median PE relative, and for the S&P that's almost 18 times, so a 7 PE discount. Small cap earnings growth is faster, and not only that, but roughly 44% of it is what I'd call very cyclical, and that's things like regional banks and industrials. That's a bigger weight than in the S&P. And then finally, there's a lot of cash on the sidelines. And I think if people are looking for breadth expansion, that's small caps.
Well, they also don't have the trade exposure. They get the benefit from lower taxes and regulation.
Yeah, that's a good point.
Without the tariffs also. So it feels like they're in the sweet spot.
That's right. And the margin of outperformance could be sizable. I mean, they've underperformed by almost 100 percentage points. So I think you can recover that over the next few years.
We were mentioning Elon Musk a moment ago. And over the weekend, he endorsed this notion from Senator Lee about end the Fed, essentially. Journal over the weekend with the piece about Powell preparing or being ready to defend a removal if, in fact, he's asked to leave. Do you think the bond market would revolt at any kind of attempts to influence the Fed or re-executivize the Fed?
Yeah, absolutely. The Fed is the most powerful entity in the world, and part of it is its independence, and it's something that even the bond market is scared of. I think changing the structure of the central bank would be not good for capital markets.
Tom Lee of Fundstrat highlights opportunities in high-quality, large-cap stocks and cyclical sectors like industrials and financials, driven by favorable economic conditions and deregulation. He also sees small-cap stocks as undervalued with strong growth potential, making them attractive for recovery after years of underperformance. However, challenges like rising inflation and trade policy uncertainties remain. Lee also points to concerns about slowing advancements in AI and their implications for economic growth. As markets navigate these opportunities and risks, investors face critical decisions in adapting their strategies. Are small-cap stocks a focus in your investment strategy given their growth potential? How do you think slowing AI progress might affect future market trends?